Hey everybody, it's Friday. I'm sitting much closer to the camera today, and it's still CoinMetro. I'm still Kevin Murcko, I think, and this is our AMA. So, as the title suggests, you ask anything within reason, and I'll answer within reason. I actually have a few comments here. I guess now we actually scheduled, getting a little more professional here on the CoinMetro AMA. Actually scheduled it in advance. Watch out, Binance. Anyway, Alex the Lion is saying that if I cut my beard before €1, he's going to sell his 25 million stack. Well, I guess the beard then depends on how much I like Alex the Lion. Cool. Something about fixing an Instagram logo. Somebody will tackle that. It's not my department, but I'm not sure that that's actually, I don't know. I guess probably on the preview, right, is what you're talking about? Yeah, I would imagine. Anyway. All right, let's jump in. I think we got a first question here. We'll see them adjust their tier thresholds Friday when price goes up so they don't become unreachable for newcomers. More than likely, yes. I do envision that there will be changes to those tiers. When staking comes, they're going to be incorporated with staking. So there's going to be probably different things, different rewards you're going to receive for different levels of staking. It may not still be 10, 25, 50. It may be right at the beginning, but we'll have the ability then to adjust, like you say. Obviously, XM at €1, €5, €10. We're not going to. It's not 500,000 euros to be able to access tier 3. That's for sure, and they will have to be adjusted. But we'll have a system that'll dynamically do that. So, why vaulting, not burning? Good question. So, it's legal ambiguity. Basically, it's the fact that there have been some precedents around the EU and outside the EU that burning may push the definition of an asset or the classification of an asset into that security zone. And so there really hasn't been, there's been some assumptions, and there's been some, I would say, indirect precedent, but there hasn't really been direct precedent, and there really hasn't been any clarity either. So until that clarity happens, we just rather be on the safe side, and that means that we vault. I think initially 4 years. When that vault ends, if there's still not clarity, we just vault some more, maybe 10 years, 20 years, whatever it is. It gives the same effect. It's pulling it out of circulating supply. It's just we just don't want to jump over the cliff and burn, and then find out a year later, 6 months later, 2 years later, whatever the case is, that now there's legal clarity in the EU and you can't burn because that makes your utility a security. Hey, Deep Philippe. This is Deep. Yeah, okay. Hey, Kevin, are there any plans to integrate ignium further into the CM exchange? Example, single authentication mechanism, same funds available across exchange, ignium, etc. This has definitely been discussed, and I do think as ignium rolls out this new e-commerce-like secondary market, we are going to see some more integrations, I guess, on both sides, especially because they're going to be controlling what is the spot market for these securities, and we'll be controlling a derivatives market. So there will have to be more integration, especially for liquidity purposes. SSO, single sign-on, and things like that, I think we've discussed that even in the beginning. It just wasn't something that was tackled initially. It's going to have to be tackled at some point, so absolutely. Same funds availability. When it comes to crypto, probably not. I don't see ignium getting into the custodial crypto game or the crypto game in general. However, euros, dollars, pounds, and fiats, etc., and the ability maybe to deposit crypto by way of CoinMetro, like instant conversion into fiat so that you can purchase things on ignium, that definitely I see as a thing, and I think that will be something that we'll be looking at in the future. Wax is set to be a huge crypto in trading of CSGO skins. My 40-year-old bald self is having a problem with that. I don't know what that is. I'm assuming it's something to do with video games and like, anyway. Total value of the GSO skin market is in the tens of billions. Will Wax be an option at CM at some point? Isn't this the perfect use of an NFT? I would say, well, without even really knowing exactly what it is, though, I think I have a general idea. I'm assuming CSGO is like some type of abbreviation for a type of game. Maybe I'm wrong. Like first player or something, I don't know, centrified single gnome unit. I don't know what it is. It's not even the right abbreviation. Anyway, without even knowing what that is specifically, it's definitely not the best use of an NFT. We haven't seen the best use of NFTs. Non-fungible tokens have a huge use case that has absolutely nothing to do with artifacts on video games or digital art. That's for sure. Non-fungibility means obviously much more traceability, much more, I mean, it means that you can pinpoint exactly where an asset was at any one time and authenticate that asset. That has a lot more use than what's currently being used for. So I don't know if it's the perfect use. It does sound, look, when we get closer, especially to those ETCFs, electronically traded crypto funds, we want to have something like gaming, and then have every major gaming token inside of that gaming ETCF, or NFT, or e-commerce, or whatever. And so as we get closer to launching that, and that's going to come on the back of new licensing, that's going to come on the back of the current licensing push that we're going through, because of that we got the recent fundraising for. So absolutely, it could definitely be something that we list. I'm not sure it's something that gets on the short list, but we are putting together a list. So make sure you make mention of this as well in Telegram. Let's get it on the list. Let's have a discussion about it. We'll discuss it internally as well. Might possibly be one of the first that we list if it's interesting enough that it seems like, it's something that's missing on the platform. Absolutely. Hi, boss. Can you explain the dip dump crash solely using wyckoff cycles? I probably could. I'd have to bring up, I probably could. I absolutely could. I don't think though, I can't bring up a chart. I'm not yet. I still need to work on my studio here so that I'm able just to, click a button with a chart on it, and then this thing little pops up right over here and you guys can take a look at it. I don't have that yet. But absolutely, wyckoff is pretty simplistic from a high level accumulation distribution. Absolutely, any chart can be explained using wyckoff cycles. It's like any other technical analysis in that I can look at the same chart, so I can show you, a 1 hour chart, 4 hour chart, 1 second chart, tick chart, whatever you want, and give you 3 arguments that it's bullish and 3 arguments that it's bearish. And then you can pick and choose which one you think is right. It's like most things with numbers in life. There may be a constant, but there may be more than one constant. So at the end of the day, when it comes to especially analysis of the technical sort, lots of people, you can find arguments for either side, and thus if you're holding onto an asset and you want to believe it's bullish, you'll find a plausible scenario where it's bullish. And if you sold an asset and you're on the short side, you'll find a plausible explanation to say that it's bearish. We got to do a trading show though, for sure. I got to work on my how do I do this on air skills. So that we can do that. Maybe just be a Zoom call, maybe as easy as that, who knows. What's going on in the desert next week? What's going on in the desert next? Dubai. I guess that's what it's not really, Dubai's arid climate. Actually, not that arid, to be honest. It actually gets a decent level of humidity, like 60, 70%. It's close to a desert. Yeah, Dubai. So there is AIBC, the guys who run the big Maltese event every year, the big Malta crypto event, also have now, let's call them side events or sister events in Dubai, also, in the Middle East, in Asia. I think they do one as well, maybe stateside as well, not too sure. But they have a few events. And so I was invited to one in the Philippines in 2020. That one got canceled. So they invited me to this one. I'm going to talk about the future of banking and blockchain, basically. So you guys will check that out. I'm sure it'll be recorded and be online somewhere. But lots of people going. Since it's one of the first physical conferences that actually is happening since the whole shutdown. There's going to be a lot of people there. So I think I'll catch up with a lot of different faces I haven't seen in a while, and potentially lots of biz devs. So we'll see. Have you trimmed your beard? I haven't. What's happening is, quite oddly, is that the beard now seems to be attracted to my face, where the first time I grew it out, it did not want to be anywhere near my face and was kind of just coming out a little bit like I don't know, it was allergic to my face. And now second time around, apparently not so much. So what I have done is that I can't really see in the, I get like, let's say this was one hair, and if you can see this, maybe on the backdrop for the building, there you go. That looks amazing. something like this where it just kind of straggles out, I'll try to, trim that off so I don't look like I just came out of a cave after hibernation. But I haven't done any real trimming around the mouth as well. Nobody likes that thing. I don't even know what you call that thing. I lived in Mexico long enough. I call it a palapa. You know what a palapa is? Thatched roof building. Palapa. Anyway, so I try to get rid of that, but I don't trim the length. I'm staying true to staying true to the game, man. €1. I just hope that by the time it hits €1, I don't look like fucking ZZ Top. If you don't know who that is, Google it. And when you find it after 30 seconds, you'll get the joke. List Shiba Inu. No. Moving on. Whoops, missed that one. There's a Dutch CoinMetro channel at CoinMetro Dutch. Right on. I would join. Probably wouldn't be too much of assistance there. Biz Dev news. Not this week. I expect next week, though, I'll have some. I'll be doing the show from Dubai because I'm there Saturday to Saturday. So next Friday, I'll be live from Dubai and hopefully have a good amount of Biz Dev news because I got meetings starting to get lined up specifically for that. So more news next week. Growth figures. As far as one thing I can give you right now is revenues. We will surpass April's revenue, which is our highest revenue on record, in the next 2 to 3 days. And we should end the month roughly around, I think, 300,000 euros, something like that in revenue. So again, we'll be making another month-on-month high revenue, I don't know, gold medal, I guess. But yeah, so the growth is happening. I think we're looking at right now, from the beginning of the year, on average, we're probably 30% month-on-month. From April to May, it's going to be somewhere in the realm of 20 to 25% growth month-on-month in terms of revenue. In terms of clients, we're seeing actually good amounts of new clients, more than 25% month-on-month. As we get more clients, obviously, we're going to see that per client revenue shift a bit in let's say the first 30 days, 60 days that they onboard. Because it generally takes a client somewhere between 1 week and 1 month to actually start to really transact. Even though they may transact instantly, they start to kind of ramp up. And so the monthly average income generally gets to at or above our current level within 1 to 2 months. So I do expect that we're going to see that affect our revenues coming into the summer, and we're going to start to see even more month-on-month push on the revenue side. Will we see Cardano anywhere in the future? And what is your opinion on that project? We will. It's on our list. It's at near the top of the list. Been on the list for a while now, actually. I like Cardano. I don't own any Cardano. Doesn't necessarily mean anything. I don't own a lot of stuff that I like. But at the same time, I think Cardano, what Cardano wants to do means that they have, in terms of value, they have a long way to go, meaning their token is undervalued. In terms of what they actually do now and who is actually using their protocol, I would say after the recent dump, it's probably a good buy, but before it dumped, like everything else, it might have been a bit overvalued. But that's only in the short term. I think in the long term, they're going to do a lot of things. I told you about there's going to be these protocol wars, right, where people are going to try to figure out what protocol is suitable for what. Different protocols will win different industries, different use cases. I think Cardano is going to win a few of those. So I do expect them to be around long term. They made it through, obviously, the whole bear, crypto, winter, death cycle, or whatever you want to call it. And now starting to see some new companies, some new industries coming on and using their protocol. I expect that to continue, and we'll see what happens. But I do think it's a good buy long term. You have talked about the potential of having more heralds on CM. How are you going to attract experienced traders to the platform? Hey, Scolby, that's actually not as hard as it sounds. The reason why we haven't been trying to attract more quote unquote heralds or tram traders is that one, the system you see now, let's say the GUI you see now, was meant as a beta. It was a beta. It still is a beta. We never went back and took all the information we learned, all the feedback we got, and did anything with it, because it was always under prioritized against other things we need to do in the business, resources and all of that. Not enough resources, so you have to prioritize. Now it's been prioritized, and there is a new design currently being worked on with our design guys. It's going to be pushed into development in June. And we should see in July, I think, probably a new version of that platform online with new features and also the ability for investors to more fully understand how the system works and also where the risks lie, where et cetera, and have more stats and more understanding of what those traders are doing at any one given time. At that point, if you combine, look, a trader for a tram is just like any other trader, right? The only difference is from a very novice traders don't necessarily look at fees, Coinbase, right? Because if you knew what you were doing and you made it to Coinbase and you had any other option, you wouldn't use Coinbase because they're expensive, but you do because you're a novice, right? So aside, the main differences between a guy that might want to trade a tram, and he may be a novice to be fair, he wouldn't necessarily go public, but he might try. But the difference between a novice and a guy we want trading a tram is that he's going to focus on a couple things. One of those is fees. He's going to focus on liquidity. And obviously, at being not the largest player means we may not have the same amount of liquidity, but we do have dynamic liquidity. We do have the ability to scale that liquidity when needed. Harald is a testament to that, to see that it functioned when the tram was at 10K and it functions when the tram was at 3 million. So there are certain things that those traders are going to look for. Having a business that you can go to with 24/7 support when you have an issue is a big thing, especially when you're managing other people's money. Fees are a big thing when you're managing other people's money. The ability to make fees alongside your clients, meaning you only get paid when your clients make money, is a big thing. And I think lots of traders maybe 20 years ago didn't care about that. Everybody was about churning accounts, right? You gave your money to your stockbroker, the guy made 20 million trades, you end up making $4, he makes 8 million off of all your commissions. That generally is frowned upon nowadays, thank God. And so most traders, especially younger traders, want to be able to show their clients that they only are making money when their clients make money. And so subscription models and things like eToro and things like that don't really make any sense because the trader's gonna make money even if you lose. And so I think those two things combined, and again, they're still traders. So cheaper commissions, better support, more instant fiat on and off ramps for their investors so they can attract investors from different regions of the world and they can invest quickly and easily. They can onboard easily. And they also have 24/7 support if they have an issue. So winning those traders, I don't expect to be all that difficult. There's not many other places they can go. And while there are some copy trading systems, they generally work on a lag. We don't have a lag. That same trade, that same order is going to be allocated identically across all participants in that tram. That's super important because when you do a general copy trading system, you have a master account that takes a trade and it gets sent individually to every single person that's copying that, especially when you do that cross-platform. So if you have a copy trading system that works across multiple platforms, you still have to send multiple signals across multiple APIs and those are hitting different servers all around the world. That latency, especially when people are trying to grab specific pricing, can mean the master account being positive over time and all the investors losing money. So there's a lot of good there. I don't really think we'll have a problem finding traders. It's just about getting the system ready so that when those traders come and those new investors come, everybody's happy and everybody kind of gets the best out of what CoinMetro is. Hey, Kevin, Telcoin who hell? Telcoin who hell? It sounds like Dr. Seuss. I don't really know what that is. I assume Telcoin is an asset that you maybe want listed. Maybe you just were trying to type this message. I'll see if maybe you type the message down a little ways. We'll find a question that I can actually read. Let's see. What can I do as an EU citizen to encourage my national and/or EU regulators to approve privacy coins so CM can list them? That's a good one. There are working groups at the EU level, and you can Google them and find them. There have been papers written that have been submitted to the EU, to the ECB, etc., about privacy coins. I would say it's inevitable that privacy coins will have a place. The reason why we initially said no to listing them was mainly because of one banking provider. It's not necessarily that a regulator came out and said, look, you cannot list privacy coins. Not necessarily. But when you walk into a room, whether that be at the bank, at the regulators, whatever, and the first words out of their mouth are, this is all anonymous and it's going to lead to criminal activity and money laundering. And then you go, well, not really. Can we list privacy coins? it's, you're just going to get smacked out of the room. So trying to fight that uphill battle, it didn't help by saying, no, it's pseudo-anonymous. And no, you're misunderstanding what's happening. And now people don't launder money through blockchain. By the way, I'd like to list all these assets that are absolutely anonymous, and people could theoretically launder money through the blockchain. So that's why we didn't do it. Now, fast forward till now, 2021. Look, I've seen papers from the US, I've seen them from the EU that specifically about central banks and CBDCs, that they're going to need an element of privacy. Nowadays, cash is private, right? Now, if you go to your bank and withdraw 10K, you might have to fill out a form. Plus, the bank knows it's your money because you went to the bank. If you go and cash a check that says to cash, right, or to bearer, you can do that to a certain amount. And in some cases, in some places of the world, you don't even have to show ID. So that or somebody may just give you cash, maybe your grandmother, a friend, a business associate, whatever, pays you in cash. That cash is relatively anonymous. You can go spend it. There's going to be no record of where you spent it. Yeah, that's why everybody likes cash. And the government's tried over the years to put together limits. Like, if you spend this much cash, you need to fill out a form. If you withdraw this much cash, et cetera, et cetera. So they understand that up to a certain point, people need their privacy. And I don't expect that to change. So I do expect there to be some form, even with CBDCs, a privacy element. Meaning CBDCs, the big issue with CBDCs right now, I know we're going off track here, but this is interesting, is when people think CBDC, they think this is an easy thing. Like, central bank, instead of issuing, paper currency, just issues, digital currency. And then that's it, done, easy. Not really. Because central banks don't deal with clients. They don't deal with customers. They don't deal with normal people. You can't just go to the ECB right now and take out and make a deposit account or withdraw money. No. ECB, the European Central Bank, or Bank of England, or the Fed banks in the US, they deal directly with banks. And the banks are where you're onboarding, but they don't deal with you. And so if they're creating central bank issued digital currency, are they creating it only for the bank? Is the bank then going to create their own digital version of that currency to spread out to the public? Will they spread out the same currency? Is it redeemable then back to the central bank? Does the central bank need to know everybody who holds that currency? Can it be anonymous? If so, how? If it is anonymous and it goes to get redeemed, how does that work? How do they keep track of who's holding the money? Do they have to keep track? Do they want to? Do they even want to deal with that nightmare? Would they still leave that to banks? So it's not just about digitizing the currency. It's about reinventing the system if that's really how deep they want to dive, which they probably won't do, which means CBDCs. Anyway, I'm off the privacy topic. Hopefully somebody will ask me about CBDCs, hopefully. What you can do is try to be as involved as you can be. And that means that finding out from your country who may be sitting on some, what official may be sitting on some panel at the ECB level or at the central bank level or wherever, and send them an email and say, hey, I'm interested to deal in privacy coins. I can deal in cash now. It has a level of privacy. I want the same level of privacy with my digital assets. I don't want everybody knowing what I have. It's a risk to me as an individual, just like I don't want people to know how much cash I have, sitting under my mattress. I don't want people to know how much Bitcoin or how much crypto in general I have sitting in my wallet. And that's a fundamental right as a human being to have privacy. And, push that onto your lawmaker. It might help, it might not, but that's really what you can do from let's say, the more grassroots level. On top of that, just stay informed, all right? Staying informed is half the battle. When you know what's happening, then it's easier for you to make a decision on how you can participate and how you can potentially, move things in your direction or try to. Don't you think the 12-cent bottom price becomes something dangerous as the price comes close to it? What will happen if some dude sells 3 million XCM and book is empty? People will feel entrapped, no? So some dude, well, theoretically, if some dude sells something and no one's buying it, then he's not selling it. If he sells into 4 million worth of buying power in the book, then 3 million is going to get sold, and there'll be 1 million left, and price will do what it does around that level. The reason why the 12-cent floor was put in place is because that's the last price anyone paid in the ICO for XCM. And we calculated that price based on lots of different factors, but it was the minimum value we felt would be needed in order to operate the platform as it grew. And obviously at some point that would become not enough either, but that was kind of the minimum. And so keeping that minimum, this is a utility token. It's not a security. It's not a stock. It's not a bond. It's simply saying that, look, these tokens have a value on our platform, and we feel 12 cents is the low. Now, when things like what happened 2 days ago, the kind of, oh God, China just mentioned something they mentioned in 2017 again, and somehow, even though most cryptocurrency volume has flowed out of China over the years, we should get really panicked about this, and that caused capitulation, mostly in retail investors. Those things happen in illiquid and immature markets. And as proven 2 days ago, crypto is still illiquid and still very, very mature. Not to say that these things don't happen in other more mature markets, because they do. Fundamentals drive markets. You might be a technical trader, and I've done technicals before in the past. I know about technicals. I could teach you about technicals. But technicals may give you an indication of what the herd is thinking. That's what they do. They also may give you an indication of what happened with price literally right before what's happening now. What they don't do is predict fundamentals, and fundamentals are catalysts. Technical analysis is not a catalyst for a market move. It's not going to start a market move or end one. Fundamentals can, though, every time. So you always have to be prepared for fundamentals in any market. Does that mean you should adjust the way you trade that market every other day of the year, or how you create a market? No, it shouldn't at all. But it will happen. You just need to be prepared for it. So yes, the book thinned out a bit. The book will regain its strength over time. That's for sure. That's how markets work. And I think we need to let markets work. Simple as that. And that floor isn't going anywhere, because again, it's tied to the fact that that's the minimum value we want our utility token to hold. And yes, theoretically, like I said, if somebody wanted to sell more than was available, well, they're not selling. But this is a OTC market. They can go anywhere they want, any decentralized exchange, and sell. They may get a much less price, but that's up to them, right? It's just like if we went and took your, credit card points, your Amex points, and sold them to someone else for pennies on the penny, or whatever, a fraction of a cent. That's up to you. You don't have to spend them and get the highest value. Maybe you can't spend them. Maybe there's a limit. Maybe you want to spend them on something that doesn't take the points. There's no liquidity in that market, so you sell them for a fraction of what they're worth. Well, that's your prerogative. Yo, Kev, ADA, when? I think I already tackled that one. So I'll move on. Did you discuss Hodl reward for DNA on CoinMetro with Dr. Koepsell yet? Have not, actually. Have not, but I expect we will sometime in the near future, but have not talked to the dear doctor as of yet. Kev, will line go down for altcoins? Will line go down for altcoins? Whew. Will line go down for altcoins? Does that mean will altcoins be cheaper? Are they going to lose value? Look, I'll say what I just said in a different way. Retail traders are fickle. So here's your basic retail trader, right? I'll make up a voice. This is your basic. This is probably going to be super inaccurate. Don't get offended by this, but here's your basic retail trader, right? So Monday, prices go up 100% in one day, right? Your basic retail trader. Yeah, I made the best decision ever. I'm awesome. And this market's just going to keep going up because I'm the smartest guy in the world, and I chose to invest in it. And got my Lambo booked. Going to buy my mansion next month, and probably going to take a few months off because I'm just the smartest guy in the world. This is how markets work. And went up 100%. It's going to go up 100% tomorrow because that's how markets work. Next day, market falls by 30%. Oh my God. Somebody must be manipulating the market because I am still the smartest person that has ever walked the earth, and I made a really good decision. But you know what's happening is that somebody's manipulating the market, some evil force called Elon China, and that person is destroying the market. It's their fault, and now my dreams are destroyed. Day 3, market's up 10% from the bottom, still down 30% from the top. I knew I made the right decision. Now everything's back on track. Markets are going up again. That's basically how it works. So what happens is people get stuck in a cycle. They refuse to listen. When the market's going up and someone tells them this is irrational, and at some point it's going to have to retrace, they call those people idiots and say that they're evil and that they shouldn't be tweeting these things. They shouldn't be saying these things. It's ridiculous. But then the market goes down and like it has to, and then they panic. And people who said that they were holding for 100K and it drops by 20%, sell for whatever they can. And so does everybody else. And that causes capitulation, and that causes prices to go even lower. Then you have investor sentiment, all these people that are now telling everybody, the bottom is not in yet, man. You don't want to go in now. You don't want to go in now. It's probably not in yet. And that's the way markets work, even regulated ones. Even though when regulated ones usually have, let's say, smarter money coming in and out of the market as well. So will prices go lower on altcoins? They might, absolutely might. Look at the amount of let's say, extension that we've seen since the beginning just of January till now. Even with these losses, most altcoins are up multipliers. I mean, even with the drop, CoinMetro is still up, I think 8x since the beginning of the year, 800% since the beginning of the year, after one of the worst days in crypto history. But people don't look at those numbers that way. They look at them another way and say it's down X since yesterday. And so that takes a while to go away. And then people lose confidence, and retail investors can lose confidence really quick. Most people aren't hodlers, everybody. That's not how most people's brain functions. So yes, it can definitely go lower. There's nothing stopping it from going lower. Bitcoin could go back to 20K, could go lower. Ethereum could go back to 1,000. It could go lower. The question is, will it? And you have to understand that the amount of money that has been pumped in now, you're kind of at the point of, I would say, no return. In that the markets, it's an elastic band, guys. You pull it really fast and really far away, it's come back just as fast. That's what we saw. Now the question is, if you're an institutional player and you were up big time and now you're just up a bit or maybe even down, this is the time you come into the market. Smart money buys in on retracements. They buy into lower prices. They dollar cost average. They don't panic when the market falls. They got into this market knowing it could fall 40, 50, 60, 70%, 80%. They knew that because it's happened many, many times before. They had an assumption that was going to happen. The difference is they don't have the same emotional attachment to the money because it's probably not theirs. So when there's no motion, it's like trading demo, guys. You don't have emotional attachments. You look at the chart or you look at the fundamentals and you go, still good. I haven't seen any major negative fundamentals, even after a 50% drop. You know what that means? That the narrative is changing. The narrative in 2017 was this is a retail-driven market. It just tanked. Retail guys are going to get screwed. And before they come out crying, we're going to tell them not to do this anymore, that crypto isn't really a thing you should be investing in. Now we saw a 40 to 50% drop in one day. I haven't seen one major news article anywhere, really. They mentioned the drop, but I haven't seen anywhere. I've still seen good stories. I've still seen multiple stories about the overall gain since the beginning of the year. I've seen multiple stories about how more and more people are getting wallets, et cetera, et cetera. The narrative is changing, and it's changing because the control of that narrative, obviously from institutions, are now the same institutions that have money in the game. So I wouldn't be too worried, but altcoins and majors can definitely go lower. After this, if you're a trader, unless you're somebody that's, every trader, at least I was taught when I was a trader, is that you have your discretionary account, could have 1%, 2%, 3%, 5%, 10% of what you're trading. Do whatever you want with that account. If you want to try to catch the fallen knife, go for it. Then you have your regular account. When things like this happen, the best thing to do is shut your computer off and leave. Come back a few days later, regroup. There's always going to be new trading opportunities. Don't try to figure out what the bottom is. Most people aren't good at finding bottoms and tops, and you don't have to be a profitable trader. And most people that tell you, I bought the bottom. Yeah, about 2 cents off, but it's close, is a bullshitter and full of nonsense. Because there's only a few people in the world that are really good at spotting bottoms and tops. So steer away from those guys for the most part. Don't worry about buying a bottom. Don't worry about selling the absolute top. Just worry about managing your portfolio and keeping your risk within that defined parameter. And then that, secondary account you have, go nuts. Would you make a video criticizing exchanges that use matching engines? Would love, we all use matching engines. Would love to share that around to extol the virtues of CM in light of the recent mega dip. I can definitely, we all have matching engines. What I think is what most people probably don't understand yet but they will, is that there are two types of brokerage models. Well, there's more than two, but there's two main types of brokerage or exchange models. You have what you call your STP, which is straight through processing, meaning there is a matching engine. It's matching with different clients. It's also matching with external liquidity providers. But the brokerage or exchange themselves takes no risk. They don't warehouse clients' trades. They don't take risk on clients' trades. They don't trade against their clients. Now, that's how I would say the majority of brokers around the world work. Those that deal with retail. Well, actually, not anymore. Well, I might be completely wrong on that. Actually, it's probably not the majority, but that's how some brokers, let's put it that way, work. The other side is an MM. It's a market maker, right? Everybody knows what everybody thinks they knows what a market maker is. Market maker means that when you buy, they sell. When you sell, they buy. So for the most part, now that's not on it can be a little more intricate than that, but let's go from a high level. They trade against you. Now, that can be good in the sense that you're going to get the price you want, because if you're trying to sell, unless it's super volatile, you'll get the price you want. And the market maker gives you that price because, well, 80 to 90% of retail traders end up losing over the course of 90 days. It's a casino. So, you want this price, here you go, buddy. You're going to lose anyway. It comes to be an issue when traders start to understand how markets function, because exchanges that are taking the other side of your position want you to lose. Absolutely, especially during volatile times. Why? Because during regular times, they can offset the risk if they have to with other institutions. If they have warehoused, 1,000 BTC on the short side and BTC really starts going against them, they can go sell that exposure to somebody else because somebody will take that from them. 1,000 BTC, no problem. However, in times of volatility, like 2 days ago when the market crashes, there's no one to sell that risk to. So the risk sits with them and they can get hurt really bad. So your more nefarious brokers will work a hybrid model. They will take all the risk until it doesn't suit them anymore, and then they won't take it at all. You know what happens at that point? No access. API is down. Oh, sorry, no trading on this asset. Oh, sorry, you can't log in right now. Oh, no withdrawals right now because we don't really know where our money is. And that probably rings a bell to many of you because, well, lots of exchanges did that 2 days ago. There are, like I said, there can be positives. But as traders become more and more aware of those two models, those three models, they generally steer toward STP, straight through processing. They want someone that's going to align their goals with their own goals, meaning the broker only makes money if I continue to make money. The exchange only makes money if I continue to make money. If I lose all my money, they lose a client and they don't make any money because they don't make my losses. And that's the important. And yesterday or day before yesterday was if you were trading in multiple exchanges, it was a clear indication of who's running either a hybrid or MM model. Clear indication. If your broker went offline, if they couldn't service you for any number of hours, if they wouldn't allow you to deposit or withdraw during the volatility, they are making money when you lose. And it's your choice what broker you like to use. During normal times, might not be the worst thing. Fills are probably pretty good. But when the shit hits the fan, which it does pretty frequently in illiquid and immature markets, that's not necessarily the people you want on your side. Hi, Kevin. Do you see any way regulation can stop whales manipulating the market like what we have seen with the crash recently? And what would that regulation look like? Hey, Nick. Not really. What regulation does, though, is it provides a framework so that more people are willing to trade in the market, more bigger players, endowments and pension funds, etc. That brings way more liquidity, which makes it much more difficult to manipulate. So it also provides rules to exchanges or brokers or broker dealers that make it much more difficult for them to operate in a manner that would help those institutions or those individuals manipulate the market. It also provides rules for how things can be shared in the media, which will also help from a fundamental angle, quell any FUD, basically. Not 100%, but to a certain extent. So regulation indirectly, almost everything regulation does indirectly can help grow the market. By helping grow the market, you can help reduce manipulation. And thanks for coming to the AMA, because talking for an hour, I can do that all day. Listening for an hour, that's difficult. That's on you guys. Can you please do an AMA with Stuart from Kadena? I'm sick of seeing them do AMAs on random telegrams. Yeah, I could do that. I've talked to Stuart a few times. He's a cool guy. We had a couple. I mean, he gets real technical sometimes, where you just have to nod along, like, But Stuart's a smart guy. I like Stuart. So absolutely. I'll say. I think we did talk about maybe it was going to be with Francesco as well as Stuart, maybe even Doug. I'm not mistaken, from their team. But we can definitely look into that. Absolutely, Links. It's a good idea. Do you think that the recent events on the market are signs of a bear market starting? I don't, Sunshine. I haven't seen any signs of a bear market start. Now, if you want to go by traditional definitions, we're down more than 20% from a high. That would mean we're in a bear market. That's definitely not what we should be following in crypto. Down 20% is, a Tuesday. Down, I guess, apparently down 50% is a Wednesday. Whatever in crypto, I don't see signs yet of a bear market. But to be fair, anybody who says after 1 day's events or even 1 month's events in a market that is only 10 years old, that they can certify a bear or a bull market, I think is a bit ridiculous. We've been in a bull market since day one. We've never been in a real bear market. I mean, the 3.5 years was kind of a lull. And yes, we reached lower prices and hit lower lows consecutively. But if you zoom out, it's kind of hard to say that the best strategy just wasn't sitting down on your hands. If you bought at any time during that, before or after that bear market, you just had to wait. And that's why, same thing with equities, to be honest, for the most part. The reason for that is equities is built on a hodl market, just like crypto is. Crypto isn't unique in that sense. The only reason that equities grow year on year, for the most part, is people hodl. Simple as that. So no, not yet. I don't see. I say not yet because maybe we will see some signs. I haven't seen them yet. Hey, Nick. Hey, Kevin. Did you hear the news? Telcoin, who wrote and introduced the Nebraska Financial Innovation Act, passed the final vote, the first banking charter in the U.S.